maybe next year will be better and you'll get the double raise. You keep hope springs eternal.
Right.
But when the cost of capital goes to 21%, and then you think it's going to go 21% every year for the next 10 years, at that point you realize, no, this is hopeless.
Welcome to Dream Richer. With ever-increasing prices of food and basic necessities of life, it's becoming harder than ever for people with lower wages to survive. However, a time is coming when these challenges won't only be limited to the lower class. Today, the billionaire investor Michael Saylor explains what he sees coming for the future. In his words, the inflation rate they are telling us is 7%, while in fact it's headed well into the 21% range. There's a reason why everyone is talking about inflation. The current inflation rate is increasing at the fastest level in more than a decade. It will impact every single one of us as the cost of living increases and our buying power reduces. Unless you get a pay rise to match this, you'll effectively be getting a pay cut, as your money will be worth less than it was a year ago. Whether you're planning to ask for a pay rise this year or not, it's a good idea to work out how much extra you'll need to simply break even with inflation. For example, if your current salary is $40,000, then you will need a pay rise of $1,700 to keep up with inflation of 4.25%. If your current salary is $150,000, then you'll need a pay rise of $6,375. By the end of this video, Mr. Saylor unravels the best hedge against inflation besides a pay rise. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
And so once you understand that, you realize that you can't succeed in business, and by the way, you can't succeed in life if you don't actually create an asset portfolio of high quality assets that will appreciate in value faster than the rate at which the currency weakens.
Yeah.
That's the epiphany, right? And it had been building up for a decade. But your frustration, if you feel like, well, everything's getting 7% more expensive every year, you can imagine you're going to get a 7% raise, and maybe next year will be better and you'll get the double raise. You keep hope springs eternal.
Right.
But when the cost of capital goes to 21%, and then you think it's going to go 21% every year for the next 10 years, at that point you realize, no, this is hopeless. And I think, by the way, every person on earth and every company on earth needs two strategies. The first strategy is, how am I going to make money? And the second strategy is, how am I going to invest my money? And so our operating strategy is we cultivate our enterprise software business and we grow it, to the extent we can, and we make our customers happy and we make money doing it. And that's business intelligence. And we'll continue to do that. Our balance sheet strategy is acquire and hold Bitcoin by any means that is accretive to our shareholders. So as we generate cash flows from our core business, we sweep them into Bitcoin. If we can sell equity and we think that's accretive, we'll do that. If we can sell debt, we'll do that. And if we have any other intelligent financial structures, we'll do that. So we took some capital out of our treasury, bought Bitcoin. Then we did a Dutch auction, which is kind of like an equity offering. Right. And at the end of that, we bought Bitcoin. And then we did a convertible debt offering for $650 million, and we bought Bitcoin. And then we did another convertible debt offering for $1 billion, and we bought Bitcoin. And then from time to time, we get extra money and we buy Bitcoin. So
I love it.
That's the strategy. We just keep working it. It's very simple and straightforward. Buy, don't sell, don't hedge it, don't get too complicated.
The minimum wage is set by the Fair Work Commission after receiving submissions from unions, employers, governments, and other stakeholders through a review process. Over the past year, the consumer prices index rose by a staggering 5.1% in the year leading up to the March quarter, with the Reserve Bank expecting it to hit 6 to 9% by the end of this year. In the last quarter, the greatest increases were in fuel, which rose by 11%, new dwellings up by 5.7%, and tertiary education up by 6.3%. Food and other grocery items also saw a significant rise, with vegetables up by 6.6% quarterly, non-durable household items like toilet paper up by 6.7%, and beef up by 7.6%.
So to give you the exact number, we have 91,326.
Okay.
That's what we have as of right now.
Almost 92,000. I don't want to put the horse in front of the cart here. Okay. But the question is, I want to go two different places with this. Number one, what are you doing with that Bitcoin? Is it just sitting with a custodian somewhere? I'm not going to ask you for your private
We're hodling it. We're hodling it, in a nice, safe place.
The question is, if you guys are sitting on 91,000 Bitcoin and there's all kinds of ways out there for you guys to like stake that Bitcoin or earn returns on that Bitcoin with a place like BlockFi or Celsius or some other third party, is that something you guys are interested in doing at all? Or are you guys just saying like, we don't care about those extra returns? Because that seems kind of counterintuitive to your investors.
Okay, well, first of all, Bitcoin's been appreciating against the dollar at 200% a year for the past decade.
Yeah, it's doing pretty good.
Okay, this year it's faster, right? I mean, this year it kind of accelerated to like 400%. You're buying the thing, it's appreciating 200% tax-free with no counterparty risk. If you were to offer me 8% interest to loan it out, if you offered me 12% interest to trade the futures, I'm going to end up incurring a 35% tax rate on that.
Boom.
Some number. So your 12% yield becomes 8% yield. And I go from 200% to 208%. I mean, it sounds like a lot if you're thinking about it versus zero, but it's really 8% on top of 500% this year. So really it's like 1% after tax, maybe 2% after tax more. If you look at the counterparty risk, it's huge. We could lose it all. If you look at the security risk, you have to move the stuff around through different custodians. It's a security risk. If you look at the accounting challenges we're a public company. We'd have to establish ourselves that we're comfortable with the controls and the disclosures and the annual reports of the counterparties we do business with. And then we had to figure out how to disclose that risk and quantify that risk to our shareholders. So by the time you get done with the accounting, the lawyering, the execution, the paying of the taxes, the deciding how to execute it, you realize that you made the business 10 times more complicated, 100 times as risky to make 1% more money.
It's clear from Michael Saylor's explanation that inflation is a serious issue that needs to be addressed. The best time to start thinking about this issue is right now. Take a step back and analyze everything. This includes the type of investments you are holding right now and your current salary. Will this help you hold a hedge against inflation? According to Michael Saylor, the best hedge so far is none other than Bitcoin itself. A hedge against inflation is an asset or investment that maintains or increases its value over time while protecting against adverse price fluctuations. The reason why Bitcoin is a great hedge against inflation comes down to three main factors. Number one, it is scarce and capped at 21 million coins. Number two, accessibility, whereby the market will value and accept the asset. And finally, number three, Bitcoin is durable and will continue to garner demand over time. To learn more about the latest crypto news, watch these videos here.